as soon as that news was announced, the price of Amazon skyrocketed up after hours. And you can see here in this little bar, this is where we closed on Wednesday. This is where we opened on Thursday. But it looks like already investors are over, they've digested that information. And so great. The excitement is already waning off. What it means, of course, is Amazon. This is a play right out of the Apple playbook, by the way. Remember, Apple did a split when their stock price was up at about $1,000. They did a 10-to-1 split. And their reasoning is if we lower the stock price, we know how dedicated our consumers are. If we can make our stock price affordable, maybe those tried and true consumers would be considering being investors as well. And it paid off for Apple. Apple has a very loyal base, and as soon as the Apple stock price was affordable, they saw a whole bunch of people come off, out of the woodwork to buy their stock. And I think Amazon is playing the same thing. Their stock is up close to near $3,000 a share. That's way too expensive for the average Joe who buys an Amazon Alexa or something like that. So they're going to be reducing the price of their stock by doing a 20-to-1 split. So it'll come down to about $150, maybe a little bit less, which is more in the price range of what a typical consumer is. So they're looking to find more investors out there that'll be loyal. Now, I don't know if Amazon has the same loyalty base that Apple. They're playing a little bit of a Hail Mary play there, but honestly, a lot of people, especially after COVID, have really dug the ease of using Amazon to buy stuff. A lot more than even before the pandemic. I think that we got into a whole bunch of mainstream people, not just early adopters and people like that. So I think this is a smart move, and I think that if you ever wanted, like for Nicole in San Diego, if you ever wanted to own Amazon, now's the time you might want to think about doing it. I wouldn't, whether you buy it, if you have the money to buy it now, that's great. Otherwise, you're going to wait for the split to happen and you'll buy it at the lower price. It doesn't matter, because if you buy it now, you'll wind up getting 20 times more shares. So what some people who are thinking about selling premium with it is they're buying 5 shares, because if they buy 5 shares, they'll have 100 shares after the split. And once you have 100 shares, you can then start selling premium against it. So people have gone out buying 5 shares of Amazon often, over in the last 2 days, so that they can go ahead and sell call options against it. The other thing you can do, of course, is you can sell your puts. So you can, if you want to pick the price of Amazon that you're willing to pay for Amazon, you sell a put, and you have the cash in your account to pay for the price of Amazon that you set it out. How do you set it? You pick the strike price. So for instance, right now, say for instance, I'm willing to pay $2,800 for a share of Amazon. I could sell the near term $2,800 put. So let's look up the price of the near term. Here it is. Amazon near term. This is the one expiring next Friday, and I'm willing to pay $2,800. And I have to make sure I have $2,800 in my account in order to pay for it. Gosh, there's a lot of options. I'm scrolling. Okay, here's $2,800. So if I wanted to, I could sell this thing. I would make roughly $21 a share. Now, remember, when you sell a put contract, it's 100 shares. So I would make $2,100. And if the price of Amazon comes around $2,800, I'll wind up getting that stock. And $2,800 per share times 100 shares. So 28, what is it going to be if I'm put 2 zeros? 280,000. uh, yeah, that's right. $280,000 will be deducted from my account, but I'll get Amazon at $28, $2,800 per share. And when this splits, I'll get 20 shares for every share that I purchased. So if you want to set the price of Amazon that you're willing to pay, so right now Amazon is trading at $29.48. If I want to set the price that I'm willing to pay and I have the money to buy it and it's just sitting there in my account, I sell the put with that strike price of what I'm willing to pay. If it doesn't go through, if March 18th rolls around next Friday and nobody was willing to sell me Amazon for 2,800 because they could go sell it on the market for 29.45, fine. I just collected the $2,000 and I can do that every month. I could keep rolling, and if nobody's willing to sell it to me at that price, I get to collect a premium. It's kind of a neat concept because I get to set the price that I'm going to buy it at, and if nobody's willing to sell it, I collect a monthly income.